Welcome. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions and ETS Tax Relief. With today's video, I want to talk about this new COVID credit that's being advertised right now. All right, so let's get into it. I saw an advertisement, and I want to pull up the advertisement because I snapped a photo of it. For 1099 workers, get up to $32,000 now from new IRS COVID tax refund. Now, let's talk about what that is. First of all, the credit is not new. Okay, this credit was released back in 2020 and 2021 for those tax years. This was the credits for sick leave and family leave for self-employed individuals. Now, it became evident right during that time that there were a lot of tax pros that were not up on their continuing education because a lot of tax pros missed it. But the fact is, this is not new. So what's been happening? Well, we know with the employee retention credit, all kinds of mills popped up all over the place, right? You too can get up to $26,000 for your employees. And mills were popping up all over the place. So much so that the IRS pumped the brakes on all of that, shut all of that down, and basically because people were making fraudulent claims. And so the IRS put all that in place to be able to withdraw fraudulent claims. They're still going after people, all the things. And so now, since we can't collect, since these businesses that were promoting this ERC mill type thing, since they can't collect on that, now they're going after the 7202 credit for sick and family leave for self-employed individuals. So here's how this looks. First of all, not everyone qualifies, okay? Let's just stop right there. When you go to someone and they're going to tell you that they're going to get you all of this money back and look at no qualifications, you need to run in the opposite direction, okay? All of these credits have qualifications, okay? So first of all, if you posted a loss for 2020 and 2021, you're not going to get the credit because the credit is based on a percentage of your net earnings from self-employment. So if you have no net earnings from self-employment, then you do not get any credit. Okay. Now let's talk about the qualifications. On the Form 7202, the first question that it asks is the number of days you are unable to perform services as a self-employed individual because of certain coronavirus-related care you required. So, did you have COVID? If the answer is no, keep going. Number of days you were unable to perform services as a self-employed individual because of certain coronavirus-related care you provided to another. So, did someone else in your household get COVID? If the answer is no, keep moving, okay? And then there was a part 2 of the Form 7202 that says the number of days you were unable to perform services as a self-employed individual because of certain coronavirus-related care you provided to a son or daughter. Okay, so if you didn't have COVID, if someone in your household didn't have COVID, and then you did not have COVID-related care for a son or daughter for a child, then you don't qualify. Okay, so and really, if you had a kid and you were self-employed, you probably qualify for this credit if they were in school, because when school shut down, we had to rearrange life. Okay, we suddenly had to become teachers at home. We had to set up new learning spaces for our kid for virtual learning. We had to do a lot of stuff, and there were a lot of kids that caught COVID as well. Right? So there were a lot of things that happened during that time for 2020 and 2021 that would have allowed you to qualify for this credit. But if none of those things happened, you don't qualify for the credit. And trust and believe you will get audited. So what is happening right now? Right now, you've got all these people popping up with these advertisements about this credit up to $32,000. I'm seeing people who are influencers that know absolutely zero about taxes that are promoting this like it's the next affiliate, affiliate marketing craze or the next MLM. Here's the deal. These people have zero accountability to you. Zero. Okay. So first of all, do yourself a favor, read the rules. Okay. If you don't qualify, please, oh, please, oh, please do not go down this road of just trying to get money. Please do not do that. As you have seen with PPP, EIDL, and the Employee Retention Credit, and now this one, what's happening? People are being prosecuted and people are going to jail. People are having to pay back money that they don't even have, plus interest and penalties. Okay? And listen, if you were a client of Everett Tax Solutions, you got asked the questions. And if based on your questions, you didn't qualify for the credit, you didn't get the credit. Because that's a part of the due diligence part for us as tax professionals where we bear that responsibility. Okay. And every one of my clients that qualified for the credit, they were told exactly the documentation they needed to keep on hand in the event that they did receive an audit, so that they will be able to be like, hey, here's the information that you need for me to qualify for this credit. Have a nice day. Okay. So yeah, this new credit is not new. This is just now a way for another mill to try to collect money from you. Now, listen, if you qualify and you didn't claim the credit, then by all means, go back and do it if you qualify. But if you don't, leave it alone. Okay. Because what you don't want is to have a fraudulent submission for a tax credit. Okay. And I did have several calls in 2021 when people suddenly heard about the 7202 credit when a prominent influencer did a video about it, and they called me, oh, well, I want to claim this money. I'm like, hold on. First, especially if you were not my client, the first thing I asked you, did you claim a loss on your return? Yes, but I want to change that. No, that's not how this works, right? You need to prepare, you must prepare your return based on the documentation provided. And if that documentation provided said that you had a loss, then you don't qualify for the credit. So again, this credit is not new. Don't fall for the okie doke. If you qualify for the credit, go get it. If you don't qualify for the credit, leave it alone. It is just that simple. Because then if you get audited and you don't qualify for the credit, now you've committed fraud. Please stop trying to normalize tax fraud for a buck. It's not worth it. Okay? So I hope that helps you out. Hope this straightens out this new credit, because it's not new. All right. Thank you guys so much, and I will see you all next time. Bye.